The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 27th, the magical Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I are going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with quite a move to the downside in a number of indices out there. The Dow's down 57 points. That's only 0.1%. No big deal there. S&P down 1 7/10%, 107 points, nearly 3% for the NASDAQ. 634-point move there. Semis are down nearly 8%. 423 bucks to the downside. You've got gold that's trading out at 27.43. That's off 35 bucks. Silver down 53 cents at 30.65. By the way, U.S. dollar index is trading to the downside as well out there. If we take a look at this panel out here, we can see that the transports are going to complete a TD9 count top today. Disregard the profile levels that you see out there. This should result in price moving back towards this oscillator and change line. That should begin tonight or tomorrow. 16,404 would be its destination to the downside. Gold's got a TD9 count top. However, it's potentially not going to form that pattern today, depending on where price closes. Right now, price is trading below bar number 5. We'll see that here in a moment when it fully populates out there. And here's bar number 5. If price closes below that close, which, by the way, that close is at 27.5920. And right now, price is headed towards that green oscillator change line. It negates that signal. There will not be a TD9 count top. Next level of support out here, we've got new profiles that keep coming and going. So there are new profiles attempting to form, even inside of gold out there. We really won't know until the end of the day whether any of these profiles will take place or take hold or not. With regard to, is there anything else out here with regard to gold that I can see or share? No, not really. We take a look at the XLI industrial sector that formed a TD9 count top on Friday. And right now, what price is going to do is go attack that daily oscillator and change line. That's currently printed at 137.35 out there. I don't see anything else worth reporting to you. If I just do a quick look here, wheat and precious metals, WPM out here. This has got a TD9 count topping signal, potentially. Let's see what this is doing. So this would need to close also above bar number 5. So we won't get a TD9 count top unless you see WPM close above today, 59.46. What else do I have out there? Nothing else really that I can see on this set of charts. So we'll move on from here. Where do we want to move on to? Let's go take a look at the daily equity future contracts. Let's look at them like this. So first of all, so you're going to see a new profile here that's attempting to form in the ES Mini, which is different than maybe what we looked at on my black background screen earlier. I went ahead and shut those down just to try to free up some resources out here. But at this stage, it's either one of two things when you look at the ES Mini chart. I'm not going to expand it out because I've been having trouble here with the system. But if you take a look at the profile that was in place on Friday, then, and this was a bearish structured profile, which price had been above for more than 2 consecutive sessions. If today's profile doesn't take hold, but that would still tell us about last week's profile, as price got right back to where a counter trend rally would end. And where was that level? Well, that profile should in fact be here present at day's end, is at 59.64. On the current profile, price not busted through support. Support being at 59.36. There's nothing broken inside the ES-mini. It feels like it's broken, but nothing broken when we take a look at where support and resistance is at. In this case here, we're really looking at support, and that's really what it's all about. You've got to know where support and resistance is at. I don't get any money by suggesting that you go get these TAS market profiles. But you'll save a lot of money if you go get those TAS market profiles, because you'll have a better understanding of what's being communicated to us by the markets. In the case of the NQ, price does not have a new profile. Instead, what price has done, got all the way back to the bottom of that profile where it would find support. It does this at 28.14. In the case of the Dow Equity Future contract, my white background system shows new profiles forming below price. Well, if in fact that's the case, doesn't mean that price can't get back there. That's a bullish message for the Dow Equity Future contract. Kind of getting the message here, the ES-mini, even though and the NQ, have had this gigantic move, if you will, or a good sized move to the downside, they haven't busted through support. And the Dow Equity Future contract hasn't even gotten down to support. That's how strong that is. The first support level here would be about 43,763. And finally, we take a look at the Russell 2000. Russell 2000 is testing the top of its old profile, or its current profile out there, as well as testing its oscillator unchanged line 2280. So if you were expecting or anticipating that Stevie would open up his charts for the ES, the NQ, the YM, and the Russell 2000 and just said, sell everything, well, that's not the case. Price hasn't busted through support on any of these contracts out here. So that's the first place to start. Now let's go take a look and maybe do a little deeper dive down into what's going on the intraday charts out here. So let's start with the ES-mini. Let's start with what? Where do we want to start with? Let's start with a 2-hour time frame chart. TD9 count bottom. Price is trading with inside its profile. Odds favor move up to the top of the profile. That's at 60.58. If we take a look at the TD9 count bottom on the 60-minute time frame chart, price has already done its thing, made its way up to the top of its bear structured profile. The number to be watching there is 60.37. The price closed above that, you move up to 60.85. But here, the 60-minute time frame chart says, okay, that counter trend move, if we're going to call it a counter trend move, the move off of the lows out there has run into resistance, and so we know the key level to be watching there. To the downside, you're watching about the 60.12 level. What else do we see out here? I don't see much else. We take a look at the ES-mini. Let's go ahead and fire up the NQ charts now. I'm not sure how long it's going to take for these charts here to fire up. Hopefully it's not more than about 10 seconds or so. Yeah, you hear my voice. The craziest thing, went to the Al Stewart concert Saturday night. Everything was just fine, but woke up yesterday morning at about 8:10 in the morning. Not that you need to be that specific, Stevie. And it was a horrible coronavirus. I mean, like, God, it was just terrible for about 10 hours straight. So I feel just fine, believe it or not. A little weak, but the voice, kind of gives you the picture out there. So it's not about even cough drops or, anything like that, but I do appreciate that. Gray Rock, just got to work through this. Anyway, the NQ charts are up there. Look at that 120-minute time frame chart. That's a TD9 count bottom, and price ran into resistance at that oscillator and change line. So you don't watch the 21,409-ish, 410-ish area. Really, watch. I'd say 21,468 is a key level inside the NQ. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I did see that Al Stewart show on Saturday evening. He's great. I love his music. A number of his band members been together with him for quite some time. I love his storytelling, though. But talk about somebody who's lost his voice. He's 80 years old. He's a ripe young 80 years old. He's a great entertainer, really, really is. And he has admitted that he can't get to the same chords on his voice that he used to. As Stevie's not going to get to the same chords in my voice today either. On Friday, we had a request from Dan in Chicago who wanted to take a look at gasoline futures. So I've got those up on our screen right now, trading out at 206, trading below profile support and its oscillator and change line. Very likely to head lower. Targets to the downside, I would say, would be at $2.03. We're at 206 right now. If price were to get below that, maybe looking at move back to about maybe $1.96 or so. On a monthly time frame, and again, I just have the purchase contract up. What you see is just some sideways movement. Will the sideways movement continue? Great question out here. So if we take a look at the seasonal, which is one of the charts that you also asked for, Dan, here's the 19-year seasonal chart for gasoline futures. And what you can see is we are entering the summer seasonal time period here where price typically elevates. So we're basically beginning that just about now. It doesn't typically peak out until about the end of June, worst case, the beginning of August, before we then start to see that move to the downside. So we are in a very favorable seasonal cycle. February is the most favorable time period or favorable month during the 12-month process out there, but no bottom. So what this would suggest here, Dan, is to maybe get a TD9 count bottom pattern on a daily time frame. Today's bar number 5. So the earliest would be Thursday. So between Thursday and next Monday, we could see a TD9 count bottom pattern lining up with the seasonal pattern to get you into that long position out there. So thanks for waiting an extra day on that. Hope that helped you out. And I'll look forward to your next request. Tom G writes in, and Tom would like to take a look at, okay, Stevie, where'd you put that? Would like to take a look at DRIP. But I'm not going to look at DRIP. We can look at DRIP. What I'm going to really do is look at XOP. DRIP is the 2 or 3 time ETF for going long the S&P oil and gas sector out there. And Tom is trying to build a position in this. So right now, what we know about the XOP is it is trading below the bottom of its daily profile. The bottom of its daily profile is 140.17. Today's bar number 4 of a potential TD9 count. No idea whether we'll get down there or not. But price is trading below support, so I wouldn't look at adding or taking a long position inside of DRIP or the XOP as we speak just yet. On a weekly time frame, price is just trading inside its profile. Inside that profile, it's got support at 137.22 or thereabouts. That's the weekly oscillator and change line. So watch as price pulls back to that level. If it gets below that level, then we're looking at a move back towards the 127.96 area. And that would happen to be the bottom of its monthly profile. So I don't see anything here to suggest that you start taking a position to the upside. This is going to be day number 2 of consecutive moves to the downside out there, so nothing unusual there. Week number 2 to the downside, so I think you've got a little bit of time here before you take that long trade inside of DRIP or even the XOP. So I hope that helps you out. Tom, as always, thanks so much for writing in. Nicholas wants to take a look at ABBV, and he's looking 4 to 6 weeks out. And Stevie only wishes that I could tell you what this is going to do 4 to 6 weeks out from now. But let me share with you what the charts are communicating to us, and then you make that decision what it looks like 4 to 6 weeks out. So let's begin with the daily time frame. The daily time frame right now is trading inside its daily profile. 170.82 is support, and resistance up at 176.08. If price can overcome resistance on the daily time frame, the next battle would be at 179.24. You've got a TD9 count bottom. So price should be able to get up to 179.24, but it's still got to take out those sellers that is testing today at the 176.08 level. Daily bottom. And if it can close above 179.24, adds to the idea of maybe the 4 to 6 weeks, or at least that is bullish from a daily standpoint. The weekly won't get bullish until you see a price close above 179 and change. Right now it's 179.95. So I presume if price rallies, it'll be in the 180-ish level out there. And that's that weekly oscillator and change line. And finally, on the monthly time frame, which has a Rhodes momentum indicator top, with price trading below profile support, with price trading below its oscillator and change line, this could be signaling to us a move to 159.37. Now, 159.37, Nicholas, doesn't come into play unless we take out the TD9 count bottom on the daily time frame, and that's the low of January 22nd, 168.06 out there. So that's what's going on with regard to ABBV. 4 to 6 weeks out, boy. I can't do anything better than that. I do hope that helps you out. You also wanted to take a look at FDX out here. Let's pull that up there. Same kind of set of scenario. What's it look like 4 to 6 weeks out? I'd have to say, based on the last several months, this is a sideways consolidation. If you just look at the upper right-hand side out there, you'll see we're kind of consolidating between 303 and maybe 270 or so. Now let's look at the daily time frame chart. Daily time frame chart shows that price is inside its profile. As long as it remains above 273.33, could see a move up towards the 283.07, 285.50 level. On a weekly time frame, you've got a consolidation with inside of support, with inside of its profile, 268.41 at support, 281.78 at resistance. So that's kind of a sideways consolidation, daily somewhat sideways consolidation-ish, and you are trading with inside profile in the monthly time frame. Your buy zone there is between 242.39 and 250.33. Resistance up at the 313.84 level out there. So that's what's going on with regard to Federal Express, FDX, the ticker symbol. John in Milwaukee wants to take a look at CARR car out there. No worries, Stevie's not too bad at spelling. And your question specifically is, where's the buy and where's the sell? And you've been in this a long time. I think your real question is, where's the sell on a long-term basis? And I would have to say, because you've been long this, I'm going to just move this chart. It's only been trading, at least I only have this thing trading since 2020 out here. And it sounds to me like you're in somewhere down in that area, down in the lows in the $10, $15 type area that said 68.22. So because you're in this for the long haul, I wouldn't jettison this position. Well, I would tell you where the signal would be to jettison the position. It would be a close below 59.33. This is TD9 count top, on this monthly time frame with price trading inside a bullish structured profile. And the buy zone out here is between 59.33 and 62.33. On a weekly basis, the next level of support, it's got a TD9 count top, is where price broke out from. And that's at 63.51. So if you're looking for a little bit of an earlier signal that things might be headed towards 59.33, 62.33, or even 53.13, all three of those levels coming from the monthly time frame chart, I would say it would be a close below 63.51 on the weekly. And finally, when we take a look at the daily time frame chart, I just have price pulling back, testing its oscillator and change line. It's really trading just below it right now. So you could see price move back to 67.42. There is that nice Rhodes momentum indicator bottom pattern out there. So no problem inside of CAR on a daily basis unless price closes below the low of January 13th, and that's down at the 65.27 level out there. So you say, where's the buy? On a daily time frame, that came in, I'd say it's 67.42. But where's the sell? On a long-term basis, closed below 59.33. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry's been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back. Welcome back, folks. We're taking a look at Nike. This is for Dan inside the Tiger's Den. And Nike today looks like it's going to go ahead and confirm an A to B equals CD pattern to the upside. The swing point that it's taking on was one from a few days ago, January 22nd. And the volume there was 13 million shares. 2 hours of trading so far, we've done 4 million shares. So we're going to call it a 12 million share a day. And that'll exceed the share volume on January 22nd. That'll give you a 1-to-1 A to B equals CD, somewhere up in the 76-ish type area out there. That does not mean that that's where price will end. I would say price is going to go target its TD knockout breakdown level at the $79 area. Now, this is kind of beautiful out here, Dan. Don't know if you noticed this, but on Friday last week, this confirmed a Rhodes Momentum Indicator bottom pattern. It had that three-river morning star signal, price closed above the bottom of its new profile. Support there, by the way, 71.41. This should make its way up towards the next battle, I guess is the way that I should state, is at 76.84. Above that, then you'd be looking at $80. And that will get us up towards that $79, $80 daily TD9 count breakdown level. On a monthly time frame, price just testing support out there. The real key level for Nike is going to be a close above that red oscillator and change line. That is currently printing at 81.13. 81.88 is the, is that the top of the profile? It is. And 81.88 is the top of the monthly profile. That's the real key number. I mean, it's nice that it's moving higher. You're going to get a daily A to B equals CD pattern on the upside. You've got a weekly Rhodes Momentum Indicator bottom pattern, no bottom signal, but you are testing support, and that can be bottom signal on the monthly time frame. It's just that oscillator and change line is going to be the real key level. And Dan, if it can close above 81.88 out there, it should do that job. And that says longer term, the Nike should continue to to head north. Let's go take a look at Broadcom out here. AVGO is the ticker symbol. This is for Duncan Steve inside the Tiger's Den. And we've got Broadcom right now gapping to the downside, pretty big way. It's trading below the bottom of its daily profile that it formed on Friday, actually formed last Thursday, which was at 233.25. So the daily, the next area of support here would be 162.75. Let's look at the weekly chart. The weekly chart is confirming a Rhodes Momentum Indicator top today, with price trading below the bottom of its bullish structured profile, 214.14. Price closed below 214.14 on Friday. You'll have a profile change in trend. You'll have a Rhodes Momentum Indicator top. That too would suggest lower price. Lower price to where? Well, the lower price here that I would see is really coming from the monthly chart now. And that would be the top of its profile or its oscillator and change line. That's somewhere between the range of the top of the profile, 186.42. Oscillator and change line, which is going to change as price moves up and down at the 179 and change level. Right now, 179.80 on my screen. So it looks like Broadcom wants to move lower. It's up to you and I to try to identify support out there. And really that next level of support, to move lower, 186.42 out there. So Doug, hope that helps you out. As always, thank you for your request. John C. in the Tiger's Den would like to take a look at NVIDIA out there. And John is not alone. So we take a look at NVIDIA. What do we have? Well, this is not really good news on a daily time frame. And what I mean by that is price is broken through the consolidation pattern. Typically, when you break through a consolidation, you do a measured move equal to or greater than the consolidation. What that does is that would suggest moving all the way back to the September 6, 2024 area out there. The low of that pattern was down at 100, or low of that candle, 100.95. All right, that's the daily message. Let's look at the weekly message. The weekly message, which has TD9 count top, Rhodes Momentum Indicator top, is just simply trading with inside its profile. So as bad as the daily looks, it won't look that bad as long as price holds support. Now, in the case of NVIDIA, the next level of support to the downside, we're basically there or close to it right now, and that is the center of its profile, and that's at 117.97. 117.97. The low today, 118.05. If that area holds, not all is lost, because where price broke out on a weekly level was at 114.86. So you've got that 118 area, you've got 114.86 is another area, and the price closed below 114.86. That tells you a move to 104.33. That starts to get us down towards, in essence, the bottom of that daily consolidation breakdown that we've got. Lastly, on a monthly time frame, last month confirmed a Rhodes Momentum Indicator top. It already had a TD9 count top, price trading below its oscillator and change line. What that means is you got a top with price losing momentum. Its next level of support is 112.73. So I'm going to go with, if the current level of support, which is basically trading into right now, 117.97, if that fails, we're headed to the 112.73 to 114.86 area. And below that, then we'd be looking at 104.33. So hope that's clear with regard to what NVIDIA is telling us as we speak right now. Mimi wrote in, and Mimi would like to take a look at a couple of energy stocks out here. First one is Kinder Morgan, I believe. KMI is a ticker symbol. And Kinder Morgan, her question was, why has it dropped like it has today? That I don't know. I'd really have to kind of do some further investigative work. Nothing that I can do while I'm on the show out here. But what I can share with you is that on a daily time frame, what Kinder Morgan has done is it's a gap down and is trading below support, which was 29.17. The next level of support on a daily time frame for Kinder Morgan is 26.14. That is where price broke out from on a TD9 count pattern. For the weekly time frame appears that it will form a Rhodes Momentum Indicator top. Price below a first key level of support. That was the oscillator and change line. And that was at 29.07, Mimi. So watch that come week's end. But this is suggesting more likely price wants to make a run for 25.91, the top of the weekly profile. Again, the daily is suggesting 26.14. The weekly is suggesting 25.91. And finally, when we take a look at the monthly time frame out here, let me just see if I can pull this off a bit. Do we have an A to B equals CD pattern? We do. So you've got an A to B equals CD pattern to the upside. What you'd be looking for here is a bearish reversal candle to confirm a sell the deep point top. And should that form, that would then suggest over time that price would make a run for its level of support. In lieu of any new profiles that form, that would be at about 23.54 and change out there. So the daily time frame has got a top. The weekly time frame's got a top. The monthly, no top just yet. Everything looks like it wants to head lower out there. The reasons why, that I don't know. Lights Recruit is trading lower. So it certainly could be in response to that. You also want to look at ticker symbol EPD. Let's get those charts up on our screen. EPD, its level of support right now is 32.92, the top of the profile on a daily time frame. Next layer of support would be 32.75, the weekly oscillator and change line. Below that, we'd be looking at a move towards 32.09 to 32.30. That's the buy zone on the daily time frame. That does not come into effect unless you see price close below 32.92, the top of that daily profile. Steve Rhodes with TFNN. We will be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Brent writes in and wants me to discuss the VIX for him. Brent, what I can't do right now is pull up my black background screens. On those black background screens, what I would have shown you is all of the future contracts going forward. And this morning, and the big tell to expect and anticipate at least some type of rally, some type of bounce, was the mere fact that the spot VIX was above all futures contracts. All futures contracts going out to September of this year. October hasn't come live just yet. So that's your first indication that this is just a shock event, not a long-term event, at least. Now, the spot VIX is traded above its 50-day exponential moving average. On this chart here, it's this little gold dashed line at 1676. So a close above that would provide sellers with an edge. But as Brent is pointing out, it still might be a one-day rate of change above plus 10%. Right now, the spot VIX index is trading. Let me see if I've got it in. I don't know if I've got it in here or not. Did I put the VIX? Probably didn't. I'll have to put that in there. Oh, I did. So you got a one-day rate. I don't have the one-day rate of change, though. Yeah, 29%. So the deal is when you get a spot VIX index that's got a one-day rate of change above plus 10%, you expect or anticipate some type of bounce or a bottom on that next session. What you're really looking for out there, though, is you're looking for this has to assume that we're going to start moving lower through the rest of the day. And that could be a possibility. Again, here's the NQ charts. I don't have the ES up, but we'll just take a look at the NQ, which could be leading things. And it had that nice TD9 count on the 2-hour chart rally right up into that red oscillator change line. So 21,400-ish area is really key area out here, just like 21,432 on the 60-minute chart out there. Now, if we are to see the markets just cruise further to the downside out there, what you'd be looking for overnight typically comes from a 30-minute time frame chart. And the best ones meaning bounces or rallies, are when all 4 time frames will do the same thing. The time frame I'm referring to, the best time frame is the 30-minute chart. It doesn't have to be on the 30-minute chart. It's just if you get TD9 count, Rhodes momentum indicator bottom patterns on the 30-minute charts, for all 4 equity future contracts, it's about as big of a buy signal, not that it can't fail, but it's about as big of a buy signal as you can get out there. So that's how you would put those two things together at this stage here. But right now, during the day, we've got to watch, for example, 21,468. What happens if price rallies up into that level? I don't have a signal just yet that that's what's about to unfold, but it still is a possibility. So when you see that spot VIX index, especially you come into a morning like this, go put up the other future contracts out there. You're looking at the spot VIX. Go look at the futures contracts out there. You should have access to them. You should be able to find them. See where those are trading. If we're trading above all of those, it should be telling you, start looking for a bottom on an intraday chart out there, at least a play from an intraday standpoint. out there. So, Brett, I hope that helps you out. And as always, good to hear from you, and thanks so much for writing in. We had a request. I didn't write down who it was from. My apology. The ticker symbol is DSVSV. So we take a look at DSVSV. What we like about today is that it's negating a daily TD9 count top that formed on January 15th, and prices trading above a TD9 count breakdown level at 76, and it's trading above a swing point from back on October 21st, 2024. That had a volume of 448,000 shares. You're up over today with 1 million shares. On a weekly basis, looks like it's trying to form an A to B equals CD pattern to the upside. Now, we just got a nice TD9 count bottom. That's where we're going to start our A to B point out there. Turns out our C point is also going to be a TD9 count bottom on the retracement. So one thing you know about BSF, at least for its weekly time frame, it loves the TD9. So you should really pay attention to those out there if you're trading this thing longer term. The 1-to-1 A to B equals CD, well, we're already up towards that. So you'd be looking for a bearish reversal candle to confirm some type of a top. Price is trading into, beginning, it's just Monday, but the swing point bottom or low is 84 cents on a weekly basis, May 24th. Only 2 million shares there. You're already at 1 million shares today. So you're pushing into a swing point with volume. This suggests that it's gunning for that high, which is 98 cents out there. And on a monthly time frame, price is trading above the top of its monthly profile. It's trading into a swing point that has volume from May of 2024 of 8.2 million shares. You're doing that so far this month with 2.5. So there you're moving in with lighter volume out there. So you're not going to have the volume needed to say you're going to go test that high. But we do get that signal, at least at this moment in time, on the weekly time frame. So all looks pretty good here. We're DSVSF. Let's go take a look at FUBO. FUBO, this is for jambalaya inside the Tiger's Den. FUBO is just consolidating on a daily basis in between its profile. This morning it's testing support, and support is 385. Resistance up at 645. I don't have anything other than that. Monthly chart, there's really no data out here for us to utilize. The weekly time frame chart, trade above profile, trade above its oscillator and change line. So it's really going to be about its daily time frame. Now, we did have price close below the bottom of its daily profile for more than 2 consecutive sessions. It did it back on January 21st and January 22nd out there. Let's make that the key level low, the January 22nd low, $3.51. If price closed below that, we're likely headed lower to where I'd have to say $2.18 out there. So, Jam, that's what I see when I take a look at FUBO. Hope that helps you out. We've got Kevin that wants to take a look at the IWM. So if we look at the IWM, and we've got enough time here, I'll try to put up the Russell 2000 equity future contract. Behaving really quite well out there. No topping signal on the IWM. I'm not sure about the Russell 2000 equity future contract. And price to trade above profile resistance, 225.85. So the IWM remains bullish. Weekly time frame is a consolidation with inside his profile. 230.94 is a key level of resistance on a rally. Monthly chart, price rallied all the way up into its breakdown resistance level, 244.46, and then it gave it up. And that giving it up was nothing more than a test of support, which today is at 220.15. That's its monthly oscillator and change line. So everything here looks bullish. You've got battles for sure. As I say, the next battle up top is at 230.94 out there. Let's go put the Russell 2000. That wasn't it. That wasn't where Stevie was going. There we go. Just missed the wrong thing. Now let's put the Russell 2000 up here. See how this is doing today. See if there's any other signals out there for you, Kevin. But again, the IWM, everything looked hunky-dory out there. And we can see the same thing inside the daily time frame for the Russell 2000 equity future contract, which is attempting to form a new profile. So the key level of support out here appears to be 2265.80. This profile will be confirmed this evening. Key level of resistance, 2337. The 5-hour time frame chart, nothing there, much to report on. As we're making bottoms this morning, again, the Russell was somewhat unaffected. Yeah, it's trading lower, but not by any gigantic amount out here. And support, it's trading within support and resistance. So 2265.80 is support, 2337 is your resistance level. Kevin, I hope that helps you out. What I will do here is we're going to break in about 6 seconds out there. So I will get the ES Mini charts up here on the screen, and we will probably finish by taking a look at those, see if there's any new data, any new figures to provide to you. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We are taking a look at the intraday charts here for the ES Mini. Not really much has changed since we looked at them earlier this morning. Again, you've got nice TD9 count bottoms on the 2-hour and the 1-hour time frame charts out here. We do have maybe a new profile that is formed since we were last looking at these charts. It's on the 2-hour time frame chart. 59.79 is support and resistance up at 60.58. Those are areas to watch today. On the intraday charts here, kind of interesting. The 10-minute, 15-minute, and 30-minute charts out there. Let's look at the 10 and 15-minute charts. They're holding support. Both the bottom of their profile and the 15-minute chart, it's oscillator and change line as well. That's the same on the 60-minute time frame. So really a kind of what I would say is like a key level of intraday support, right around 60.14, call it 60.12. If we start trading below 60.12, we're very likely to head lower. That lower should take us back towards the early morning bottoms. On a 60-minute chart, 59.60 happens to be a level of support out there. That's what I'd be watching. We're not there just yet. Right now, we got prices testing at key levels of support, if you will, when you look at that bottom row of charts out here. Now, the 30-minute has since gone on to form a TD9 count top. Let me see here. I'll do this. I'll try to do this as quick as I can, but get to all the 30-minute time frame charts. It'll take just a moment to first find it, and then 30-minute equity futures. Okay. Let's see if this thing will populate before we're off the show. Oh, they're on a different screen. Okay, well, Stevie can take care of that. Change windows. Give me a moment. We will get there. You're just going to see white screens. It's not going to really float your boat. Hopefully this here populates. So you got TD9 count on the YM, not on the Russell 2000, TD top 9 count on the ES, and the 30-minute NQ. Okay, perfect. So we do have new information. Now, what all that suggests, that price should pull back to test support. In the ES Mini, you're looking at 59.98. In the NQ, you're looking at 21.070. Inside the Russell, or the Dow, you're looking at 44.372. Have a wonderful, marvelous Monday. Not sure that I'll be able to make it this afternoon with Jacob. May just give this throat here a little bit of a rest. But have a magical Monday, folks, and we'll see you tomorrow.